Okay, welcome everyone to today's webinar. This is going to be on what's new in Voyant US as of July 2025. My name is Jamie Phelps and I'm the Client Success Lead for Voyant in North America. Today we're going to walk through 3 new features and updates in the Voyant US platform. We have 2 new charitable trust options. They're going to be charitable remainder annuity trusts, also known as CRUTs, and charitable remainder uni trusts, also known as CRUTs. We have a new tax filing status option for married filing separately and a new standard deduction feature. So let's dive in. We're going to start with our base plan. This is going to be William and Bianca Johnson. They have a retirement goal of $450,000 a year annually in retirement. They are a higher net worth couple with a few investment accounts. One is currently at 18 million. This is the one that we're going to move into a charitable trust. So to do that, I'm going to create a what if plan. And this first one is going to be for a CRUT. So I'm going to create this plan. Once that is created, I'm going to move down here to my bottom right hand corner and I'm going to select the trust options. From my drop down on the trust types, I'm going to scroll up and I'm going to select the charitable remainder uni trust. Once you've selected this, the options are going to populate for that trust type. And I'm going to select the grantor as William. He's going to be the one that is funding this trust. I'm going to give the trust a name. This is not an existing trust because this is a trust that we are going to propose to them as an option for something that can reduce their estate tax. We're going to go through here and fill in all of these options. And just as a note, if you have questions about what any of these items mean, all of the ones with these hyperlinks have additional information that you can just click on and get a little bit more information about what that item is and how it affects the model. So we're going to keep the hurdle rate as it is. This is going to be a fixed term for 20 years. So the trust is going to term out at the end of a 20-year term. The payout percentage to the non-charitable beneficiary is going to be 4.5%. And then at the end of the term, I want this to liquidate to a donor advised fund. One note on the donor advised fund, you do already have to have this created in the software to be able to select it. So I've already created one in the software. It currently has a balance of 0. But at the end of the 20-year term, the remainder in this trust will liquidate to this DAF, and that is how I'm going to have this one set up. Now, I do need to name the non-charitable beneficiary. The non-charitable beneficiary will be who receives this 4.5% payout annually. So I'm going to go over to my beneficiary section, and our non-charitable beneficiary will be the spouse, Bianca. I'm going to click Done to save this. And now I need to fund this trust. So I'm going to go to my plus button, go to transfers. I want to transfer to the CRUT, and I want to transfer from this investment account that has 18 million in it. You can either specify a specific amount or you can do all available. Now I'm going to do this all at once and go to timing, and you can either create an event on the timeline just by double clicking here in the gray, or you can select an event that is already on your timeline. So I'm going to click Plan Start, set as my start event, and click Done to save. I'm going to turn on my details so that you can see this. Now the pink here as other income is going to represent that 4.5% payout from the trust to our non-charitable beneficiary, who is Bianca. So that comes in the second year, and that goes for 20 years, and then that trust, the remainder of it, is going to liquidate to that DAF. To be able to see this a little bit more clearly, I'm going to go to Year View, and I'm going to go to year 2. You can see that trust payout coming into their personal cash flow. So the trust payout from CRUT to Bianca goes into their cash flow. If I go to investments, you can see down here below, we have a withdrawal matching that same amount from the investment account. that belongs to the trust. And under expenses, you can also see, not displayed on chart, the payout from the CRUT. You can see in the taxes section any of your charitable cash donation carryover, and you can also see under federal taxable income your below the line deductions that are related to this. Now, the other thing I wanted to show you is if we go to the year after the trust terms out, what I should expect to see in investments is that the remainder of that trust is going to contribute into that DAF account. So if we go back 1 year, you'll see the trust here has an end of year balance of 21.8 million. And then if we go here, that end of year balance is 0 and it is being contributed into the DAF as we have directed it to. You can also on the chart move over here to the CRUT, and you can see that happening here in the cash flow. And you can go to the assets chart here and see that for 20 years it has assets building up in the trust until it is donated to the charitable DAF. Now, another thing I wanted to show you are a couple of ways to show the benefits of this trust to your clients. First would be in the insights section. You can go to the potential estate tax insight and show them a comparison of the base plan versus this plan with the CRUT. So you can show them the difference in their estate tax outcomes in any given year of the plan between these two scenarios. Okay. And I prefer the estate tax comparison chart. It's just a little bit easier for me to see. So if you hover over any year in the chart, you can see here in the estate tax CRUT version, the outcome is 2.8 million versus 15.7. And then if we go even towards the end of the chart here, we can see 29 million versus 46. And then if you want to go to the very end of the plan where everything is finally rolled up in the legacy, we can go to overview, legacy, and we can do a comparison of the base plan versus the CRUT, and we can see that final end of the total wealth transfer. So this is the base plan, total wealth transfer after tax is 86.9 million. And then this is the CRUT plan, total tax is 29 million with a total wealth transfer of 61 and a total charitable impact of 54. So you can compare and contrast the two plans. Now next, let's do a walkthrough of how the CRAT would function. So I'm going to go back to my base plan. Now let's do a what if where we look at the charitable remainder annuity trust. So I'm going to copy my base plan, create a plan called CRAT, and we're going to do the same thing, but this time we're going to look at the charitable remainder annuity trust. I go again to my plus button, go to trusts, and let's select the charitable remainder annuity trust this time. Again, my grantor is William because he's the one that's going to be funding this trust. We're going to give it a name. This is not an existing trust. This is going to be a lifetime trust this time, so this will not term out until our non-charitable beneficiary dies. We can set a payment amount. Let's do 350,000, and then this will just liquidate to a non-defined charitable entity rather than a DAF this time. Let's set our non-charitable beneficiary as Bianca, so she will be the one that receives that 350,000 payout each year until the end of her life. And we're going to click Done to save. And again, I'm going to go to my plus button, hit transfers, and we're going to fund this trust. So we're going to transfer to the CRUT. We're going to transfer from that investment account, and you can transfer as many assets into this as you want to. And we're going to do all available. Timing is this year. set that as our start event and click done. Now that we have funded the trust, if you turn on your details button, you'll be able to see other income. That is going to inflate up each year. So 375 in the second year, and it just goes up from there each year based on the inflation rate in your plan settings. And then if you want to again see the details of this, you can go to year view, move to the second year of the plan. You can see the trust payout from the CRUT. And again, you can also move over here to the chart that is specifically for the trust itself. You could look at cash flow, assets, and taxes. All right, let's take a look again at the ways that you can show the benefits of this strategy for your clients. Let's go to Insights. And let's take a look at potential estate tax so we can compare this plan versus the base plan and take a look at the estate tax outcomes. Go to estate tax comparison, and then we can hover over any year in the chart and see what the differences would be in the estate tax outcomes. So 46.3 million versus 19.8 at the end of the plan, and then you can kind of hover over any of those years to compare and contrast those differences and see what they would be. And then again, you can also go to Overview, Legacy, and compare and contrast different versions of the plan. So if you wanted to see the CRUT versus the CRUT in this example, you could do that as well. And you can see the tax outcome differences as well as the total wealth transfer differences. So total wealth transfer after tax on our CRUT is going to be 61 million with a charitable impact of 54, and then we have a total wealth transfer after tax of 124.8 million and a total tax of 19.8. So you have the ability to compare these plans side by side and get an idea of what would be a better outcome for your clients based on what their priorities are. Now, a couple of things that I wanted to go over really quickly before we go are going to be the new features around standard deductions and married filing separately. Those are both going to be found in taxes and other financial information. So if you go in here, you'll notice this option here to toggle on or off use standard deduction. I have this toggled off today for the charitable trusts, and that's because I don't want to use the standard deduction. I want to be able to see the impact of the deductions from our charitable giving. But this is going to be automatically toggled on for our plans. So you do have the option to go in here and toggle it off if you need to. And then also for married clients, the automatic option is going to be married filing jointly. But if you do need to select married filing separately, you now have this option in the dropdown to model this other option for the filing status. And for any single clients, the option is automatically going to say single here. And then also just a reminder down here that you do have the ability to step your client's state of residence and standard deduction. So if you ever want to model something for a period of time, but you want to change it for another stage in their life, you can model that here as a step for the future. I hope that this was helpful. If you have any questions or you want to walk through any scenarios on a one-to-one with us, you're more than welcome to reach out at support@planwithvoyant.com, or you can click the name of your client, request support, send us a message, and share the client, and we'd be happy to take a look at the one that you're working on right now. All right, thank you for listening.